All right. Hey, good morning. Guten Morgen. ¿Cómo te va? How are you today?
Hey there, boo-boo. You gotta get the pips out of the market.
Cool. So welcome to Forex.Today, the YouTube community of almost 19,000 foreign exchange traders. Today we'll conduct technical analysis, fundamental analysis, go over trade planning, go over what the Fed said yesterday and why the dollar's weak and all that kind of stuff and whether it'll last. Let's go. Let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! Hey, my name is Wayne McDonald. I'm a currency trader just like you. I gave up a job as a venture capitalist to go after the big money because I'm like $100 million a year market opportunity. How about $2 trillion a day? Well, I guess I invested into the right market because it's now $6.5 trillion a day, according to the International Bank of Settlements. So, holy smokes. How awesome is that, huh? Very, very cool. So, hey, look, you buy low, you sell high. What's the big deal? So, again, I'll cover technical analysis, or fundamental analysis, whatever you want. We can talk a little bit about the Fed, as I said, but I'll let you be the boss. I am just a humble servant and analyst. Maybe we'll get some trades on too, huh? Wink, 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 nudge, nudge. You know what I mean? Lovely session in London today. Yup. Very cool. So thank you for being here. Thank you for everything that you do and all your hard efforts. I can see it. I appreciate it. And I hope you're feeling good and strong. Okay? All that kind of stuff. I'd like to thank Traders Way for being part of our community too. It's very, very important to have an execution partner in which you trust. Fast execution speeds, narrow spreads, huge swaps, world-class customer service. Tradersway.com. Visit Tradersway.com. Go in the bottom right-hand corner. Open up a demo account. Okay. I use a variable. That's the VAR. So you try that if you want. Download MT4 or MT5. Play some trades. Now, here's the thing. You'll say, okay, I do like the speed. It's good. Okay. The spreads are competitive. The swaps are more than competitive. Okay. But the thing is, a lot of newer traders, they just try to find the cheapest. And the thing is, they don't understand that cheapest isn't good. In fact, most of the time, those fly-by-night brokers are just slipping you in and out and you end up paying more. But you're amateur, you don't know, and you don't know these things, and it's easy money for them. Instead, you need to choose a broker that you trust. Okay. Now you don't have to pay more for that, but they still have to earn your loyalty and respect. Okay. So give Traders Way an opportunity to do that for you as they have done for me. Daniel says, Wayne, you're doing an incredible job these past webinars. I see it in the notes that I take. Cool. A lot of important and rare ones. Thank you. Hey, my pleasure, Daniel. Thank you for being a positive contribution to our community. Okay. Peck asks a question. Because of the Fed and what has happened, Is this the end of rabbit season? What did I tell you in February, March, April, and May, Peccary, and June? When would that likely to happen? Of course, I don't know the future, but when have I told you the end of rabbit season would likely occur? Yeah, end of August. Yeah. And so what did we talk about 2 or 3 weeks ago when we printed a bottom? I don't know. Let me just pick one. Maybe this is good. Maybe it's not. Let's see. Okay, let's go here. Okay. And where's my drawing tool? EpiPen. All right. I said, okay, this is interesting. Right on time. What do we need before we can call this truly a reversal of downtrend consolidation? When can we confirm uptrend? What's the first step that we need? Okay? Not a bottom, but a double bottom. So don't feel like that's it. Now, it could be. I'm not here to talk you out of that. Okay? But I've been through this a million times. And a move like this used to break my spirit. Because you're like, you finally get through the summer, you finally get your higher high, higher low, you buy it, you're up 250 pips on a bunch of trades, and you're like, man, this is great, I'm going for it. And it comes all the way back, and you give them all, you give all those pips away. You know, this could be times, 10 trades, for example, and you hang on to it, and it comes all the way back. You're like, well, what the hell was this move all about, right? You're like, well, what the hell was that about? Why does it come all the way back? And then you're like, oh man. And then you give up, you lose some faith. You lose some conviction. Now, I'm not saying that's going to happen, but it happens a lot, Peccary. A lot. It's happened to me a lot. So I don't know if it's a defense mechanism or maturity through experience, right? Depends on which one. But I love this. I love what it did yesterday. That's great. I'm super happy. Just be emotionally prepared for it to come all the way back. And I did tell you this in February, March, April, May, June. Okay. So you need to be prepared. I'm telling you. Okay. It doesn't mean you don't trade the current move, because as a trader, it's your job to trade the move. It's your job to do this. Okay? But maybe, just maybe, when you have good, solid technical reasons to take profit, you take some profit. No harm in putting some money in the bank. Okay? No harm. Okay? Okay? Now, let's do a little more fundamentals, and then we'll drive into some technicals. Where's my browser? Where my browser at? Okay. Let's do 10-year T-note yield. Market watch. Good enough. Okay, 1.277. About an hour ago, it was 1.26. Yesterday, it was lower than 1.25. If this is inching its way up, you have permission to sell the US dollar. Now, that's exactly the opposite of what you've been taught and probably what you hear on TV and in the newspapers. But as that rate goes up, I believe the dollar will weaken, and I have permission to continue selling. That's one thing to do. Okay. The second thing is what? There's all kinds of things. How about balance of trade data? Okay. Just do, ultimately, just do your job. It's not that complicated. Come on. Cool. So is this a turning point? For now, but maybe not on the long term. Not yet. Okay. But maybe you count this as the bottom, and maybe it is. Generally, it's not. If you looked at seasonality, you'd say, well, this move is early, but whatever. Okay, whatever. You still got to do your job, and that's buy a dip. Cool. Suppose that's a little too thick. Delete. Okay. What do you stink? Okay. So if you were to try to really skippy scalp this, okay, don't worry about the 200 EMA. I've told you, and it's in my book, where when you breach the 55, like we did here, the target is the 200. Okay. Isn't that interesting? There's a whole section in the book about that. And I believe I talk about the psychology of why. So maybe a lot of people understand that, but they probably don't talk about the psychology of why that is. Now that we're there, we are at fair market value. So euro dollar doesn't have to go up, doesn't have to go down. Okay. So now you got to be careful, because if you're only on the smaller time frame, you're tempted to keep this going, and maybe while it's holding true, you continue to trade it, but it doesn't have to go higher. Once again, on the 4-hour chart, which is a pretty reasonable chart, okay, we are at fair market value. Now on a daily, you could see this is looking at more like 119. Okay, all right, cool. So it really comes down to, what do you want to do next? Okay. Day traders are obviously going to try to catch a pullback if they can get one. So let's do that. Let's change this template now and say day trading bullish bias. Okay. Cool. Okay. Or you continue doing what's going on and you keep buying the 21. Okay. Now, to measure that, there's a little bit of price action going on here, right? So what do you want to do? Do you want to do that? Play the price action? It's very aggressive trading. Maybe by the end of the day, we're down here, or maybe it makes another high and it goes up. Okay. Thiago says, hey, why do schools and universities teach it differently? And we're talking about the direction of interest rates and the value of a currency. And that has to do with the difference between all currencies in the world and the reserve currency. And I don't believe I've read any textbook that talked about the relationship between reserve currency interest rates and reserve currency valuation. I don't, ManQ, right? Is that a ManQ book behind me? No. So I got one here. I don't think this one says it. I have another one here. I don't think this one says it. I have another one here. I don't think this one says it. And I have a cupboard full of other ones. And I don't recall that. So I just have it from experience. Okay. William, you've read ManQ stuff? So like ManQ does things backwards compared to most textbooks, where, many will talk about demand side and he'll talk about supply side, which is kind of his thing. But as far as supply and demand, for the reserve currency, I think you kind of have to throw in a bit of behavioral finance and maybe some economic game theory to make it make sense. Okay. So like, for example, why did the 10-year T-note go from 1.6 to 1.25 after the last Fed meeting? And well, what did the Fed basically say? We're not going to taper. Remember, the market was freaking out that they were going to taper. And then the Fed said, no, we're just thinking about tapering. So what did they tell them? You can front run the Fed for another 3 months. Okay, so interest rates fell. Okay. You're business school, or you're not in business school, you're an undergrad. Okay. When will I make a macroeconomic book for, I want to do bigger and better things, Roderick. Here's what I want. I want to find 25 people in this community we call Forex.Today, teach them how to trade properly, and then have them all work for me in my hedge fund. Done. I don't want to write books and go on speaking tours and talk on TV. I've done all of that till I'm blue in the face. Okay? I've done all of that. That's so boring. That's so 10 years ago. So I took 10 years off. I went to school. I raised my kids, right? Living a really boring life. And now the next 20 years of my life, to close off my professional career, let's make $1 billion a month profit. Okay. I've traded $1 billion a month, or almost. I don't think I actually hit $1 billion in volume in 1 month, but I've gotten close. So I'd like to have, like, let's do something really awesome. That's what I want to do. Okay. I want to buy a yellow Lamborghini and donate it to charity so that they can, sell raffle tickets and make money. And we'll give away yellow Lamborghinis as an inside joke. Okay. But writing a book, why? I spent more money throwing the party on my book launch. Did you guys know that? When I launched my book, I threw a party. 3,000 people showed up. I bought everybody beer or wine or soda for 3,000 people, right? I had camouflage cups that said FX Boot Camp. Your drink tickets, you tear off the stub and give it to the bartender. And the other part of your ticket was a bookmarker so that you can, when you're reading, you can put it in the book. I might even have some of these things still around somewhere. Maybe not quickly, but anyways, yeah. And so I don't know, what did I spend on that? 25 grand? I can't even remember. Right. So the point is, I'm a horrible marketer, and I just want to teach you guys how to trade. And I want to find 25 of you that can trade really good. And if I say, hey, Victor, go trade the strategy for me on this currency pair, and Victor can go and do it, and I can trust him. Okay. No, no. All right. So anyways, let's get back to this. Dude, are you a buyer or a seller of this? I mean, what have we been talking about all these weeks? At what point will you recognize that things have changed, right? Do you guys remember me going through this over the last 2 weeks? When will you recognize things have changed? And more importantly, will you adapt to the change? Okay. This might be one of those situations. So the thing is, are you doing something about it? Have you changed? Are you doing something? And remember, psychologically, I still think this could come down, but doesn't have to come down today. Okay? So you do your job, you mark your lines. Well, if it comes all the way down there, what about this? Is this a role reversal? Yep. Look, easy little role reversal. Little Asia fade trade. Cool. Okay? We've got some consolidation here. So if, right? And now we're working this. We're working this. Role reversal. Okay? Now, even though I told you we're in a neutral point, you could still trade this. So, William, are you going to Harvard? Is that why you're reading ManQ, or are you going to a different university reading ManQ? Different university, yeah. It's interesting that that they would do that. By the way, I'm wrapping up my Oxford program. It's been 6 weeks. Okay. I did homework while I was on vacation. I do homework while I'm doing business, doing homework while raising kids, doing homework while being a husband. I got grades yesterday. My wife asked me, she's like, hey, did you get your grades? I'm like, well, the last one I got was a 93%. And she said, was that from last Tuesday? I'm like, I don't know, not the one I just did. It was when I did the other one. And like, to me, I can't even remember. And she's like, no, you don't understand. You spent 4 hours doing something that you said would take most people 2 days. And you're on vacation. You woke up at 5 a.m, right? You did a webinar, live stream on YouTube, and then you worked for 4 hours while we were out doing other things with the family. And you worked on your homework and you crunched it out and you banged it out. We came back and picked you up for lunch. And you submitted your work. And you got 93%. I'm like, oh, yeah, you're right. Yeah, you're totally right. Yeah, well, then that was a good use of the 4 hours, right? Like, for me, it doesn't click. And she's like, she sees the sacrifices, and I just take the pain. So the nice thing about pain is you try to ignore it. She makes the sacrifices, and you don't forget those, right? And I'm like, you know what, honey, you're right. So anyways, so it's been 6 weeks, and I'm wrapping it up. Today I have to write 3 questions, basically the future. So like I was doing like neural networks, machine learning, artificial intelligence, and a couple other things was my reading yesterday. So I spent 4 hours reading yesterday. So the reason I bring this up is I know you're busy and I know it's a fun time of year and I know you got family and you got things to do. So do I. And if you're just learning Forex and I'm still pushing forward to learn new things, there's sort of a catch up, right, that you need to be doing. Right? You need to have catch up growth. If I'm slowly advancing my steady state of I know what I know and I'm trying to learn new things, but you're doing catch up, meaning if I'm growing at 2% a year, you need to be growing at 12% a year. And eventually we'll catch up. And in 20 years, we could sit at a bar, have a cocktail and a cigar, and we're equals. Or maybe in 10 years. But that means for you to catch up, since I'm still growing as a trader, I'm learning more, I'm getting more experience, I'm getting more and more education. You need to be hustling more than me. Okay? You understand? To get out of the mediocrity, you need to be growing faster. Okay? All right. Gold. Look at this, huh? We've been talking about this one for a while. Look at that. We have our line in the sand. I have it all boxed out. And what? Boom, 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 boom. Holy schnicker-schnocker. Cool. So now what? Yeah, now what? What are you going to do next? You're like, Wayne, tell me what to do next. No, what does this have meaning to you? How will your behavior change, if at all? Okay. I think I'll just leave it like this. Okay. In your analysis, would you say this is now moved from sideways to up? And if so, what are you going to look for next? Anybody? Okay. Now, notice this. I didn't just draw that now. You're like, well, what the hell is that? Let's take a look. Let's see if we can find, because I call these leaving myself notes. Okay? I like to leave myself notes. Apparently, it was even a old target for this old bullish move. You see the old bullish move? Up, down, target. Okay? Looks like we're finally here. Is this next? Could be. Is this next? Less likely, we call that an OOP. Okay? Lots going on here. Remember, people that show up late and then enter trades usually get punished, don't they? If you're responding to a market move, you've added no value, no alpha. Okay? And on the long run, you will be punished because you're not contributing to the market. It's like a parasite. Okay? So those that were more interested in buying at support because they were bulls, okay, they got paid already. And don't you think that if they saw this, that they might consider taking some profit? And an amateur trader might buy it up here, right? Cool. What's the next step? Well, if they take some profit, where will they buy it back? Well, that's where technical analysis comes in. How about there, eh? How about there, eh? Yeah, for sure. Yeah, don't you know? Yeah? Yeah, maybe here. Maybe. Depends on how aggressive the market is. Okay. Buy at 1810? Yeah, sure. Now, you might be saying 1810 because of this, but that's so this month. I'm more interested next month, but of course, I want to see this come up. Okay. So it might actually be more like 20. But whatever, man. Whatever. My point is, stop using the tools to make all your decisions. It's more like, what kind of behavior do you want to exhibit next? Okay? Are you now buying dips? Off of what? Daily pivots? Daily 21? Remember, again, in my book, and don't worry, that's not a shameless plug, okay? It's Wiley Publishing's book, not mine, so I don't give a damn if you buy it or not, okay? If you, right, if you're above the 21, okay, then you're bullish and aggressive. There's two G's, right? Aggressive. Okay. You're bullish and aggressive. So you buy the dip, buy the dip, buy the dip. What do I want to do next? Buy the dip. You buy the dip. You keep buying the dip. Buy the dip. Get in there. Come on, son. Buy it. Okay. Now, if you're down here on the 55, you're bullish and conservative. Okay. You're looking to get out. Double tops smells really good in a time like that. Okay. Any thoughts or comments on that? Okay. Once again, very, very basic price action going on here. Nothing difficult. Nothing. Yeah, there's just nothing difficult going on. Just thinking about since like all day, I guess this was, Asia, I think, right? Roll reversal. Very, very simple. Roll reversal. Very, very simple. Roll reversal, very, very simple. And we just did another one. Okay. And for those who are new, I invite you to visit FX Bootcamp and maybe take the price action course. So when I say simple, and if you're scratching your head, like, what do you mean simple? Well, then you just don't know. So maybe pay money and take a course. But you buy the dip, right? It used to be resistance, now it's support. Okay. Buy the dip, used to be resistance, now support. Buy the dip, used to be resistance, now support. Buy the dip, right? Used to be resistance, now it's support. And if we make a new higher high, pretty simple, very, right? Pretty simple. If it makes a new higher high, so we're way up here, okay, you drag this across. So I think there's what, four hours of videos on price action? Okay. Okay. The thing is, are you catching them? Are you doing it? Are you buying them all? Are you buying one and walking away and you're happy because you made 28 pips this, today? Remember that you're never going to get anywhere if that's all you're doing. Okay. If you're like, I made 28 pips today and I'll make 15 pips tomorrow and maybe next week I'll make, 38 pips. Dude, you're never going to get anywhere. Chand, I'm just telling you, it's price action. Okay? If you don't know, I've told you things, I told you I don't care about any indicator that you use. I don't care about indicators. They're helpful tools, but if you use them to make decisions, well, if they tell you what to do, you're not using them right, so then you might as well get rid of them all. Okay? You need to know two things, in my opinion. Okay? Price action. If you don't know how the market moves, you will fail. It doesn't matter. And therefore, you'll be praying that your MACD or your CCI or your RSI, your Elliott wave, you're going to be praying that all this stuff somehow tells you what to do because you don't understand price action. Forget it. And by the way, generally speaking, all these tools are just different forms of measuring price action anyways. Now, someone might challenge me on that, but I would challenge back. Anyways, if you don't know price action, I don't think you'll succeed as a technician. Now, if you're going to trade like George Soros and you're going to listen to the Fed meeting yesterday and then make a trade but never look at a chart, if you trade that way, you're a pure fundamentalist. Okay? All right, you'll succeed. You don't need price action because you're not making decision on price, you're making decision on policy. That makes total sense to me. You can be successful. We all know George Soros was a successful Forex trader. Cool. But if you're going to be a technician and a tactician, okay, you need to know how price behaves. If you don't, you will fail. I'm telling you, this is my opinion. This is my honest advice. If you don't know how the market moves, you're going to fail. Okay? The second part that I like is pivot points. Do you have to have pivot points? Pivot, right? Well, I think pivot points, I got it backwards. I think, in my opinion, if you are going to succeed, you should know pivot points. I have that much conviction. Okay? And both of these are leading indicators. Okay, why is that important? Because I'm planning tomorrow, next week, next month. Think about that. I'm training you to not care about what's happening this second. You should already know what's going on. You should already have trade plans developed hours and hours and hours and days ago. So if you just show up and you don't know what you're doing today, you have failed. You're already failing. Hey, what are we doing today? I wonder what's going on. You're failing is what's going on. You're falling down the hill faster and faster. Okay? So if I'm trying to teach you to work today to come up with tomorrow's trade plan and next week's trade plan and August's trade plan, okay, and even sort of year-end trade plan, then you don't need lagging indicators per se, because that'll just tell you what's already happened. That's valuable. But in active trading and trade planning, you need leading indicators to tell you, well, what about tomorrow? What about tomorrow? What about in 2 hours from now? What about tomorrow? What about 2 days from now? What about 2 weeks from now? And for that, you're going to need leading indicators, because we're not talking about last Tuesday. We're talking about next Tuesday. Okay? So if you don't know these things, because both of these are leading indicators, then you're just lagging. And that's probably why you're not reaching the goals as a Forex trader that you set out for yourself. Okay? You guys with me on that? Cool. Okay? Cool. Okay? So you might remember yesterday, I did something like this. Okay? And then I took it further and I said, this is plan A, but this is plan B. Why? Okay? Why? Hey, by the way, Darko, I do want to talk with you, but I think the swing trading group is probably not the right time for that. But yeah, let's set things up. Let's go to the Caribbean. Let's go. Let's do it. Anyways, okay, the reason for all of this is I'm a bull. So I buy a breakout or I buy a retracement. But I'm a buyer. You're welcome. Got really lucky. The dollar suddenly weakened in my favor. I know. I planned it that way. Based on macro and fundamental analysis. Okay? So, good, I got lucky. My thesis. Okay? Yeah, I got it, Darko, and I added you to my signal, but I didn't send you a message. But I'm going to try. I got another busy day. It's crazy. Okay? Cool. So my investment thesis in this period anyways, I mean, this is a short-term period, has been proven correct. So how do I make money? I did my analysis and I created an investment thesis, and it turned out to be, at least now, somewhat correct. Boom. I added value. I predicted the future. Well, that's valuable, huh? Okay. Oh, Chand, how do you apply fundamentals to a chart? You don't. Charts are technicals. A chart has price and time. Okay? Isn't that nice? So, what about the fundamentals? We call that bias. We all have biases. It's the ones you purposely create that are helpful. Okay? So I preach to you that this bias is the most important thing you can develop. That you have done analysis, fundamental macroeconomic analysis, and you create a bias for the direction of global money flow. Now, in my algorithmic trading program at Oxford, they had the director of machine learning, the director of artificial intelligence, the director of quantitative finance, the director, of multiple departments. And I'm telling you, oh my God, these guys are smart. I'm very impressed with Oxford, right? A Harvard guy is telling you, holy crap, these guys are talented and smart. Wow. And so they bring in all these people from all these disciplines, right? And they're trying to teach a computer how to teach itself how to trade the markets. And one guy said the most challenging data set he's ever worked on, right, is the global finance market. He says there's millions of variables. The most complicated thing he's ever tried to apply math to is finance. Okay? So anyways, we get all these guys, brilliant people that are working. They're not just mathematicians. They are working on algorithmic programming and trading for big hedge funds and other institutions. And they're using all this really advanced mathematics. And do you know what the number one thing is? The number one most important thing to developing a successful algorithm? Understanding the sound economic reasoning of the model. And I'm like, yeah, you're biased. They say mathematicians, what they do is they play around with the numbers until they come up with a fascinating solution. And then they go looking for problems in the finance market because they know a hedge fund will pay them millions of dollars for an algorithm. And it rarely ever works, probably never has. You have to start with the problem and then develop a solution, not develop a solution and then go find a problem. And therefore, no matter how smart you are and how complicated the algorithm is, the number one most important thing is the sound economic reasoning. And I propose that advice to you now. The most important thing to you as a currency trader is think beyond today, think beyond the next 2 hours. What is the economic, right? The sound economic reasoning behind what is happening in the market? And if you get that right, your trading will improve. Then the second part is taking that lens of how you look at the market and apply your leading indicators so that you can plan the rest of today, but really tomorrow, next week, next month, and the rest of the year. And now you are using things like game theory. You are using fuzzy logic. You are using machine learning, but your machine is between your ears. Okay? You're using quantitative finance. You're using economics. You're using finance. You're using sentiment. You're using, again, game theory is really important because people make decisions based on the decisions they think you're going to make, right? But anyways, you got to get these big things right first, and the little things will fall into line because you'll also know when not to trade. Okay. You understand? Okay. Yeah. Well, imagine one day you have to sell what you do to a potential investor, and you can't just say, I show up every day, I open up my charts, and I look for shit to do. You're not creating any value. You are not valuable. And if you find that you're losing money, well, you're definitely not valuable. You're a destroyer of value. So instead, what is it that you do? And why are you doing it? The Medallion Fund? I don't know anything about the Medallion Fund. I'm not sure what that is. But I was reading about Paul Tudor Jones. Over a decade ago, they were trying to create, they called it Paul in a box. That was his algorithm. And his algo, is profitable, which is really interesting. They have been successful in teaching a computer to trade, which is good because computers don't go on vacation. Computers don't ask for raises. Okay? Okay? Okay. Jen says, so when does a trend start, like a big move on Aussie in 2012? Okay. Well, that's pretty easy. First of all, it started before 2012. Okay. $2011. Pretty easy. Go back to the RBA website and ask yourself what happened here. That's it. You will have to do some research. Go to the RBA website and start researching this period from 2010 to 2012. What was happening, globally? I would suggest you look at inflation levels. I think you should look at export data. Okay. And it's probably enough, right? and just central banking reports and speeches. Yeah, right. Okay. So I think I was telling you the other day, somebody asked me about trading crosses and when do I do trade a cross? And I said, well, it has to do with one of them. At least one of them has a strong fundamental reasoning. I try not to trade something that doesn't have any fundamental reasoning. You know, like random Aussie strength and random dollar weakness, I don't want to trade. But when at least one of them has a reasoning, then I like to get on it. And I was telling you about this period here about Governor Stevens. You guys remember that speech? And he'd come out and say, it's not worth this price. It's worth this price. He actually said that. So I sold it as hard as I possibly could sell something during this period against anything there is, right? And then he said it again here. And just like a madman, sold it. Cool. Now what? Yeah, that's the $1 million question, or maybe the billion, or maybe the $6 trillion question. Now what are you going to do? Okay. Okay. So it's pretty easy. Remember, technical analysis is the easiest part of trading. My God. Okay. Cool. So trap it, set it up. But again, if you don't know if you're a bull or a bear on this, then you don't know what's happening and you don't know why. So forget it. Don't worry. You'll make money today and lose it the next day. It doesn't matter. Have you ever been in a situation where you feel really good because it took you over a week to lose the same amount of money you used to lose every day? You're like, wow, that's a really good improvement, right? We got to get you outside of that and the major improvement. Okay. Okay. Now, Mark says, is the 200 the target? Okay. The 200. Okay. Why can't you buy it somewhere between 75 and 70? And based on your economic research, maybe you have an opinion. I don't know what your opinion is. But you go for 1.11111. Why go for 100 pips when you can go for 4,000 pips, 3,000 pips, 2,000 pips? Okay? Okay? So you get 2,500 pips, let's say on average, times 78 trades. Well, to make that kind of money, you have to have a very strong opinion why you would buy a dip and why you wouldn't take profit with your 100 pips. See, that's the thing, guys. You make 100 pips and you're like, that was a really good week. You take your profit and you're done. You have no wealth. You only have income. It's like going to work so you can get a paycheck. Because then you go to work for 4 hours, then you go home. And then tomorrow you got to work for 6 hours, then you go home. And they pay you for your time. It's horrible. It's guaranteed poverty. And if you make 100 pips over the course of a trade that lasts 2 or 3 days, and then you make a, and then you're out, and then your next trade makes 58 pips, and that lasts only 1 day, and then you're out, and then you buy the next one, and you make 112 pips, and then you're out, and the next day you lose 34 pips, and then you're out, and you just clocking in, clocking out, clocking in, and you might as well just work at McDonald's because at least you're guaranteed to make money. And you probably make less than minimum wage doing that, okay? Instead, focus on doing your research on your bias, and you can say, oh my God, look at this. This is interesting. I have a fundamental thesis now, a strategy in which I want to start buying Aussie. And I might buy Aussie all day, every day for the next 5 years. I'm going to be the king of Australia. G'day, mate. Ripper. Okay? Okay? So you buy it, buy. You're like, dude, that's crazy. Well, we call this a portfolio. Okay? And if you want to make big money one day, you have to scale. You have to scale. Okay? You have to scale. You can't do 1 trade a day, 2 trades a day, 3 trades a day, 1 trade a day, 2 trades a day, 3 trades a week. Dude, one bad trade because you got unlucky is going to crush your performance. You'll have a lower return with higher volatility. Your Sharpe ratio will suck, and now you're dead in the water. Okay? You need to think like a professional. Okay? And you produce something of value. And someone that says, well, I really like what you're doing with your scalping. Your scalping's really good. You have a lot of winners, and you're producing a reasonable amount of pips. And then the person with big money says, well, can you do it with $50 million? Well, here's the problem. Now your lot size, because you're also very over leveraged, you'd be placing billions of dollars into the market through your broker. Can your broker execute that quickly? How much slippage do you have? What is the cost of trading on that? Okay. Will at that level, can you still get the same level of leverage? And what you'll find is you can't do what you're doing on a big account. You can only do what you're doing on a small account, which means the more you grow your account, the less that you're going to be able to grow your account. There's an event horizon where eventually you're going to run out of steam. And you show your successful track record to a big firm, and they're like, you can't scale. We want to give you $50 million. That's this, or let's say $5 million. The smallest investment we can make in any emerging manager that we bring on board is $5 million. That's part of our mandate. Okay? And then we're looking at your trading history. We don't think you're going to be able to trade this doing yours, right? And if you do, you're going to face a lot more slippage. And if your average winner now, even if you have 90% winners or 80% winners, if your average is, let's say, 18 pips profit, but now because of your lot size, because you have to scale up and all that kind of stuff, it takes a little bit longer for your liquidity partners to be able to execute the trades. All of a sudden now, your average is 13 pips, and then they look at some other things and then compare you to this, that, and the other thing. And you're like, you know what? We're not interested. Thank you. Glad you're successful, not interested. So I'd rather you, right? Because when you're scalping, you're playing either volatility or what's the other way? You're playing well, I guess it's all volatility is really what it is, right? You're playing a volatility. And your biggest risk are things like, you're paying 2.5 pips plus 1 pip slippage, and it brings your average winner down, which will lower your Sharpe ratio. Okay. And then of course, any drawdown period is going to hurt. So instead, here's what I'm trying to say. You can use your short-term ability to enter trades, but what if you could hold trades for longer? And instead of going for 13, you're going for 130. And then what if you're even bigger than that? Right? What if you're even bigger than that and you say you can hold for years? Okay? Well, now you can scale. What if you're entering 10 trades a day, 5 break even, right? 2 are small losers, and 3, you're holding on for almost forever. Well, now you have 3 trades a day that are going to be big winners, 2 trades a day that are small losers, cost of doing business, and everything else is break even. Okay? Now, because you're mark to market, this is going to improve your Sharpe ratio. Okay? So anyways, what if you can combine some of this stuff? Now, how do you know to hold a trade that long? Well, that's your job. That, my friend, is your job if you're going to be a professional trader one day. Okay? That's your value add. People will hire you for that opinion. Okay? And right? And then if you could do it for them, they'll pay you very reasonable sums. But if you add it up, guys, like, I don't know if you ever do the math. When I tell you guys to do the math or bust out an Excel spreadsheet and do the math, what is your typical winner? Okay. What's your average winner? 40 pips? What's your average loser? 28 pips? How many winners? Okay. And how many trades per day? Per day, per week, per month, per year. And explain to me how you're going to make a boatload of money. And it's going to be very difficult unless you make thousands of trades per year. Okay? And you're like, well, I only make 1 or 2 a day. So you make like 10 a week? Well, not quite. So you're doing what? 35 or 40 trades a month? So you're doing 500 trades a year. And by the time you wash this out, what is it, 2,000 pips a year? Dude, you should be making 2,000 pips a month. I don't know how to make 2,000 pips a month. We just figured your problem out. We've just found out what the problem is. So now we can focus on getting you a solution. If you don't, your numbers will never work out. And then, of course, the next step is add more value so your winners are worth 400. Or if that sounds crazy, how about 100? That's a good start. Your winners are worth 100. Your losers are worth 28. You have a decent winning percentage, whatever it is. But instead of 500 trades a year, okay, you make 5,000 trades a year. Now, what's the likelihood with 5,000 trades of bad luck occurring? Almost none. Because if you're consistent and disciplined in executing your trades based on trade plans and biases, yes, you can go through you can have a bad week. You can have a mediocre month. But over 5,000 trades, the law of averages say most of your trades are going to be average. Okay? So it'll look like this, right? So you'll have a distribution. Okay? And you'll have your normal, most of your trades are in here. And then you'll have some bad luck. Every once in a while you have some bad luck. Really negative trades. Don't worry about it. Okay? Sometimes you have really amazing trades. Okay? Now, it'd be great if this was fat and this was skinny. But I think when you look at normal distributions, they're both going to be skinny if you're doing things right. Okay? And you're going to have a lot of little losers, but you're going to have more mediocre winners. So obviously this isn't really how it would look. So you'd have some sort of, it wouldn't be a normal distribution. Let's clear it out. Oops. It would look more like something like that, right? Like, I know this isn't quite right, but go with me. Okay. So you're going to have a few big losers, a lot, and it's even going to be flatter than that. Yeah, it'd be even flatter than that. I don't know if I could ever get this drawn properly. It'd be really slow. You'd have like this, right? You'd have this really thin, flat, and then it would just pop. Okay, so it's not a normal distribution. And in this case, that's probably, well, in fact, it is a good thing. So you'd have quite a few big winners, mostly, decent winners here. Okay, and a few really bad losses, although that shouldn't really happen. But what I mean by bad losses is sort of in one period have lots of smaller losses. So really that's not drawn properly either. But then most of your trades are sort of like break even or small losers. Okay? So anyways. Okay? How do you do this with FIFO? You can't. Okay? The U.S. government has deemed it risky to make long-term investments. Why? I don't know. Okay? It happened, I think, in 2008 or 2009 when they released the new Farm Bill. They, in the Farm Bill, and I know it sounds weird, but in the Farm Bill, they lowered leverage and they reinstated FIFO. So with that being said, position trading and carry trading, which I find is a form of long-term conservative investing, has been outlawed in the United States. Now, why would they want that? I don't understand. Michael, you don't find a website you just hire somebody. Was it 2010, Gregors? Yeah. I remember I did a video, about it. I'm like, look, because people were freaking out. How can I trade Forex without a 200 to 1 leverage? Don't worry about it. You're fine. FIFO is based by the United States. I don't think anybody but the United States has FIFO. First in, first out, by the way. Okay. But it's one of those logics, like I don't understand. And I think it's because, here's my guess. Back in the early days of retail Forex, some brokers got into trouble because, first of all, they were really bad brokers. Some of them were just college kids out of a dorm, like no joke. There was no regulation. Anyone could start one of these things, right? And so what happened was there were situations, and I think it was called One World or One World. They were the ones that was actually college kids running it out of their dorm. And all their clients were like long the yen pairs on carry trades, leveraged 500 to 1. And really, it was because the broker was so poorly managed that when the bottom fell out of the market, like so when suddenly all the yen pairs crashed, there was no other side of the market. And the broker failed because I think they were trading against everybody. And then whatever. And long story short, people got crushed. Investors lost their money. And in America, you can't say, well, who cares? They're all degenerate gamblers. You can't say that in America. You can say it in Hong Kong. Hey, if you threw a bunch of money at the stock market and you lost because you put money into some BS Chinese mainland company and you found out that it was a BS company, well, look, you shouldn't have invested. I kind of like that idea. If you lose a fortune on meme stocks because you're a degenerate gambler, I don't care, right? But anyways, in America, they're like, well, someone's got to pay. We need to protect the client, even though they made stupid decisions. So they shut down that broker, but then they said, well, to protect the client from these situations, we will overregulate everybody. So now we're going to overregulate the broker, but now we're also going to prevent traders from being put into a situation like investing for the long term. Well, what they said is to protect the investor from, this idea that one broker could basically be caught, like, I don't know, like if everyone was long yens and everyone had stops, or you were managing their account as if they had stops, meaning margin call, then if they all blew up their trading account, who cares? Like, this is kind of what happened to Traders Way in the period when the Swiss National Bank pulled the plug on the peg to the euro. The market crashed hard. Amazing crash in seconds. Brokers like FXCM United States and Alpari Global went out of business like that. Now the question is, how? Traders Way never had a problem because they're like, well, all the trades are executed. They're all in the interbanking system. If our clients lost money, they lost money. But all we did is we brokered the deal. They bought a bunch of Euro Swissy. Right? They said, Traders Way, buy me some Euro Swissy. They're like, okay. So they went into the interbanking system, converted their dollars or whatever it was into Euro Swissy. Good. Now you own your Euro Swissy. And if the market crashes, your account gets closed. It's a margin call. Right? It's a margin call. So anyways, it would have been like, so I think the government steps in and says, look, we need to protect our poor, stupid retail investors. And so we're going to overregulate the whole thing. And I'd rather say that they put in guidance and rules for how a broker works and stuff. Maybe have net capital requirements that are higher. They're already pretty high. I think they're 20 million or something. But nonetheless, to me, I would argue it doesn't make sense to essentially make carry trading impossible in the United States when, to me, it's a long-term conservative investment strategy. Now, if you want to mess around with leverage for the client on the client side, or if you want to mess around with regulatory compliance and net capital requirements on the broker side to ensure that if the market becomes too heavily weighted one direction, like everyone on the planet is long yens and nobody's short, well, now who's got the other side? Okay? Well, instead of having the broker be a market maker and therefore take the risk, which you shouldn't be doing, then just say, well, look, if no one's willing to take the other side, then spreads are going to go up. Make them pay the spread. You want to buy a pound yen and no one's selling pound yen, you're going to have to pay 25 pips spread. And then someone will be enticed to give it to you, right? So, but why not the broker? So I don't know. There's got to be a better mechanism. Okay? So I don't like first in, first out. I like the idea that clients should be protected, but making it impossible is not a protection. Okay? I don't like it. It's sort of like the police showing up to my front door with needles forcing me to get vaccinated. Okay? Sir, we are going to vaccinate you, or we will hog tie you and vaccinate you. Okay? Whoa, whoa, whoa. Okay? I don't have a problem with vaccine. I'm vaccinated, but this idea of saying I have to do something, I can't do something. Look, I'm not talking about I'm not allowed to rob banks. Okay? I'm not talking about I can't murder my neighbor. Okay? And I'm not talking about that stuff. Okay? Okay? But I am saying, look, if I want to carry trade, I should be able to carry trade. Look, I have a stop loss. I'll put a stop loss in. If not, I risk my account being getting a margin call. Well, that's my risk too. Okay? And if we're trying to protect the broker from going bust, maybe the broker shouldn't be a market maker. Maybe the broker shouldn't be trading against me. So maybe we address that. Okay? So I wish in the United States you can carry trade, for sure. But with FIFO, it's very difficult. So here's the other way to carry trade in the United States. Instead of putting, a trade here, a trade here, a trade here, a trade here, trade here, trade here, trade here, it's sort of a VWAP style, you just have to put one giant trade here and pray to God it goes up. One big trade versus a whole bunch of little trades, because you can only really make one trade. And by the way, how many people here don't understand what first in, first out, FIFO? How many people don't even understand the concept and would like me to explain it just for a second? Okay, great. All right. Imagine we're building a portfolio. Okay? Portfolio. And, all right. So let's say I bought here, and I bought here. Okay? Cool, right? Good trades. And now I buy here. And the next candle looks like this. What happens? I get stopped out. And they take this trade out of the market. This is the first one in, and it's the first one out. FIFO. First in, first out. This is the trade I could have stayed in forever, collecting interest every day. And even if it came all the way down and it took a year, I can still earn interest every day. But instead, they said, kill this one because this one got stopped out. Oh my God. Oh my God, you're killing me. Seriously? You took that one out? You see the problem? Now you're just like, oh no, why would you do that? To protect you, sir and madam. To protect me. The trade I've been in for years, earning me free money every single day. I'm collecting interest. And you took me out? Why did you take me out? To protect you. This short-term trade killed my long-term position. And I honestly don't understand it. Yeah, for your own good, right, Jimbo? I'm like, so those are the rules, okay? So somebody needs to lobby the CFTC and the NFA and say, oh, look, we understand what you're trying to protect people, but maybe this isn't the best way because on the long run, this is probably the most conservative of all investments, okay? It's not like the difference here is like if you're short-term only, it's sort of like flipping meme stocks, but you're not allowed to buy Apple and hold it for 10 years. Sorry, Peckery. Yeah, I got to change the setting. I noticed that. There's so many settings, I can't figure it out. So I'm like, well, look, you want people to buy and hold for long periods of time. You do. I think you do. You take away luck and volatility. You don't want people to lose money. Well, if they use a stop loss, then you wouldn't lose money. If you're holding it for years, it's going up, not down. And if it comes all the way down, well, at least you're still collecting interest. I mean, okay. I hated working with the NFA. Okay. Yeah, they rubbed me the wrong way a couple of times. Yeah. So I don't want to work with the regulators. Okay. I'm just going to make money, live a happy life, raise my children, hope they turn out to be good people. And, that's it. Be done. That's the sum of my life. To work with regulators and lobby to make changes, it sounds like a lot of work that no one will actually care about. And of course, then you have to spend the life fighting the government. So as soon as you fight the government, the IRS shows up, they're going to audit you, they're going to do a bunch of things. Like, dude, I just want to live a happy life. Right? I can see, I've been through that whole experience and it was horrible. Horrible. Okay? Anyways. Okay? Oh, okay. Talk to your lawyer and see if you are allowed to open an account in another jurisdiction. Simple enough. All right. So here's the thing. How do you feel about this, the 5A cross down? And how do you feel about this, the role reversal? Would you buy it here? Would you buy it here? Or would you buy it here? You might even throw this in there. I don't know. Well, the thing is, if you bought it here and made 28 pips, would you be happy? But see, technically this could work out. The next one could be green. The next month could be green. And then the next month is green. And the next month is green. And the next month is green. And the next one is red. Okay? And then what? The next one is green. The next one is green. And the next one's green. Okay? And I propose to you that the value you created was knowing where you were and its importance. And that even if you traded this one trade, the difference between, 28 pips, 280 pips, and 2,800 pips, it's the same amount of work. You place a trade, you drop to stop. Probably in the first 2 days, you move your stop to break even, and you do nothing. Collect interest every day. I don't know what the differential is. It's not very good right now. Historically, it has been. And you might be able to sit on that for 5 years. Okay. Another example is I told you approximately here that you could sell the US dollar for 5 years. How many people were here that day? All you had to do is buy it that day. Now you're done. Every day, doing nothing. That's the definition of wealth, by the way. Wealthy. Wealthy people don't work for money. Their money works for them. So you put some money here, and every day, you don't do anything. Okay? And if this turns north, right? Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 up. Now, the interesting thing, of course, the interesting thing is people see 1, 2, 3, 4, 5, 6, 7 months. Nothing's happened. Yeah. Okay. I think I bought Apple. I think it was like 1995, maybe? Okay. I bought Apple in 1995. I'm guessing. I have no idea what the date was. Okay. I paid $6 a share. My goal wasn't to make $7 a share. Okay. I don't remember what I sold it for, but I think it was like $1,000. And now it's since then is split and split and split and split and split. Okay. But since this point, it's split and split and split and split and split in two. Okay. So can you do that with the currency? Well, that's for you to decide. That's your alpha. So thank you for being on my team. I want you to succeed. First of all, you got to know technical analysis. Second thing you're going to need to know is fundamental analysis. Third thing is macroeconomics and central banking. Fourth thing, how to scale and get big. Okay? And a lot of this is not intuitive or even counterintuitive. But since you're a subscriber to this community and I am here every day, we can do this together. If you're in my swing trading group or live trading group, I'll see you at 2 p.m. today at FX Bootcamp. Thank you for being part of the Forex.Today YouTube community. Thank you for being a client of tradersway.com. Peace on earth. May the pips be with you. May our profits